Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, June 9th, 2013. The market this week, between Thursday and Friday, went exactly, almost to the penny, to the target that I've been talking about for a long time. And I've been saying that the 1600 level would be a buy in the market, and it turned out to be the perfect call. Went right to it. And so what I want to do in this video is I want to go backwards to the actions of midday Thursday and break down on multiple fronts why 1600 was a buy, not just from the technical level. The technical level is really just the first part, but being able to get into a long trade at the lows and hold it with conviction is not easy to do, and that can be assisted by looking at other factors such as what market internals are doing at that time and the market profile. Okay, so going back, we know what's happened. We had a strong, good low put in at 1600. 1600 was the buy point. Why was it on a technical level? Well, obviously two specific areas came in. One being the prior high. That would be here. There's your prior highs. And I've probably got to change this color a little bit so we can get it to yellow. And the other being the trend line, right? So we've got prior highs. We know that old highs are going to create these old resistance points are going to create new support when it comes down, and we have our dominant trend channel, which we've been looking at for a while, which has been holding the market right at 1600. So we know this is the area that we're going to be looking for, correct? So now let's go into Thursday's action, or Wednesday's action, excuse me, and let's go into market internals and see what was happening there. So we switch over to the quad, and this is the same quad that's used every day in our show on ShadowTrader, which Brad talks about and calls out live all through the trading day, so you should definitely tune into that. Let's see what was going on internally and see just how bearish or bullish it really looked on the low on Thursday. Okay, that low on Thursday happened right here at 11:15 a.m. This bar is from 11:15 to 11:30, so I don't know the exact time, but it's between 11:15 and 11:30. Upper left is the breadth. Let's take a look at what was the breadth doing at that time when we were coming in. Well, let's look at the breadth here in relation to the prior day. This is Wednesday. Yet where was the market more bearish? Where did the market go lower? Wednesday or Thursday? The market went lower on Thursday. Yet look at what the breadth looked like on Wednesday, and look at what the breadth looked like on Thursday. And this point right here, that's 11:15 to 11:30, where the market actually made the 1596.50 low, or whatever that was, right? It just went just below the 1600. Okay? So there's a huge divergence there in terms of how negative things are. Also, I would draw your attention to the fact that during the course of the day, before the market made the low, the breadth is actually positive here for the majority of the morning, going all the way up to 10:45 a.m. On a day when there's stronger sellers that are going to really drive the market down below a technical level, this wouldn't look like this. On a trending day down, and that means that a day that opens high and closes low and doesn't stop in the middle of the day and turn back around at a technical level, on a trending day, this breadth should look more like the prior day. It should look more like this, where it opens high and just goes low. So that's your first clue right there that the low is probably going to be put in and the low is probably going to hold. Let's take a look at the advanced decline line here, which is your second one. Here's what the advanced decline line looked like on Thursday at the lows. Notice where the open is, right here. So on Thursday when we put in the low, the advanced decline line didn't even get lower than here in its opening bar. That's very, very important. And it also, in absolute numbers, look at what the low was. Minus 420. Those of you who follow our analysis daily in the ShadowTrader broadcast and have been following me for a while know that that's not a very bearish number. When a market is really driving hard to the downside, the AD line will not be minus 420. The AD line will be minus 1500, minus 1600, etc. So again, there's this divergence there in the internals, right? In the AD line as with the breadth. Let's take a look at the ticks. Let's scroll back to Thursday and let's look at the ticks. Okay? Look at the low tick reading here in the ticks, which happened right at the 11:15 mark, right? That's on Thursday, and that's good because it shows you that there's a washout going on in the market. It's a minus 1,000 tick reading. On a trending day, there's multiple minus 1,000 tick readings. It doesn't stop. When it's only one, you know that it's just a spike move lower and it's probably buyable. We've talked about this very often, that on days where there's trending action to the downside, you will have multiple minus 1,000 ticks, and you should not be buying those minus 1,000 ticks. You should not be fading the market on a minus 1,000 tick move, right? There's only one there, okay, on the course of the day. And again, as I was saying before, the tick action prior to that is not very bearish, and you can see what happened to the tick action after that. We'll get to that in a moment. So now that we have our internal picture, we've looked at two things so far. We've looked at the technicals, we've looked at the internals. Now let's look at yet another piece of the puzzle which also gives even more confirmation and more confidence to buying this low, and that, of course, is the market profile. Let's look at what the market profile was doing on Thursday at the low. So one thing that was happening on Thursday that really keyed me in here into thinking that that this was a buyable low was the fact that at the moment when it was happening, and I'm going to split this out here, I want you to pay close attention to these two brackets here. These two brackets are where 70% of the futures volume of the day went off, and they're called the value area. This is a concept that we work with in ShadowTrader very, very often. Every single day we talk about this, and if you read my blog every morning, you'll get all the value areas. But the value area essentially is very important because if price is to move lower and stay lower, then value has to migrate lower with price. And the point of control, which is where the greatest amount of futures volume went off, which is here, is the black line. That point of control should also migrate lower with price. That's a sign that the OTF or other time frame, meaning the longer term players, the ones that want to sell the market on Thursday and keep selling it and hold those short positions for a while, it shows that they're in control. And on Thursday's action, we don't see them in control. We really just see short-term traders kind of selling all at the wrong time. And one of the main reasons for that is that you didn't get a migration of value or the point of control lower. What I want to do is I want to split out this profile this way so you can see it easier in a split fashion. And we can clearly see that it was G period here that made the low at 1596.50, right? But look at where G period opens. The letter O here denotes where the period opens. I want to put a little arrow on there so you can see it really clearly. Let's put this. Okay. G period here, and this is yellow unfortunately, so you're not going to be able to see it. I apologize. G period opens right here. Correct? And yet, so that means that when G period opens right here, none of this here has happened yet. None of this down here. Well, when G period opens, and if the market is so supposedly bearish, where is value? At that moment, value is here. It's relatively unchanged from the prior day. Value is here. And yet, what happens then? All of a sudden, they start spiking the market lower. Yet value is not migrating lower at all. This bracket here, it builds out at the end of the day because of the amount of futures volume that went off here. But at the time that the trade is occurring, we're seeing a single print spike of this G period down to the lows, right? When you know that value is really up here way above. So what does this tell you? That short-term traders are getting themselves overly short, and they're getting short in the hole, and they're getting short at bad prices at the wrong time, and that is what most traders do. That is what the majority of traders do, especially the shorter term money, I should say. Not really necessarily the majority of traders, but the shorter term money that is not in it for longer time periods. They tend to act very responsively, not responsibly, and very emotionally, and they're emotionally driven, and they're selling away from value, and that's never a good thing. Value is always really where it's at, and yet price tends to draw our attention away from value, and very often that's where mistakes are made. So notice that even the profile is showing very clear signals here as to the fact that price is definitely getting away from value, and again, it makes that area all the more buyable. And when you put it all together, putting these things together is really what gives you the confidence to be able to buy and hold a low like that. So I purposely took some snapshots here in my Twitter feed, which I was putting out at the time after buying the low and holding it towards the end of the day. And the first picture I put out was right here saying that, I wanted to sell half the position at 1619.75 because of a technical resistance that I saw. And you can clearly see in the picture that, look, where's my average price on the day in the futures? It's below 1600. So even as it looked like it was death for everybody else, thinking, oh my gosh, this market, is really falling apart here, it's really just coming right into that technical level. And if you use all these tools that I've been talking about, it gives you the confidence to be standing right there and just be buying it. My initial buy here was actually on a limit order at 98 something. I don't remember, it's like 98 and a half. And then, I bought the rest, I think, at 1601. And you can see here it gave me an average price of below 1600. And once that happened and I was in the trade, then it's a question of monitoring for continuation, as Dalton always says. And by monitoring for continuation, it's definitely doesn't mean looking at this. You definitely want to immediately take your attention away from this screen, and you want to put your attention back on the charts and on the internals, but most importantly, the internals. And that's why after I tweeted this out, I specifically tweeted this, where I said, the pick in the last tweet is sexier, but this picture is much more important one. It is what we talk about daily on ShadowTrader and Tasty Trade. And this was the picture that I sent out. And this picture is of Thursday's action in the market internals. It's the same as the quad that you look at and that you see Brad talk about in the show every day. However, in my version on another platform, I have both the NYSE and the NASDAQ on one screen. And look what was going on at the bottom in the NYSE breath, from the low straight up, in the NASDAQ breath from the low straight up. And as far as this breath is concerned, when you're in a long futures position and you're going from negative to positive and you have the little pause at the zero line and then you're able to get back up over zero, that is a sign that you should hold the trade, because it's difficult for the futures to roll over to the downside once breath goes positive, because remember, that breath turns slowly. All right, once it gets going in one direction, it can stay in that direction. Same thing with the AD line. Notice you get your low here. It's a higher low than the opening low, which I mentioned previously or earlier in the video. And look what happens after that. Straight up. NYSE and NASDAQ straight up. And those ticks that we talked about last, remember, we had our minus 1,000 tick reading here. What happened after that? This is a very important key in terms of monitoring for continuation and being able to hold the trade for a big gain, noticing that the ticks are constantly making higher low, higher low, higher low, higher low. It's a trend of higher lows. That's very, very important. Again, giving you the confidence to hold the trade. Same thing on the NASDAQ, going up, up, up. All right, so that's how you put all the pieces of the puzzles together for trades. When you want to make a trade at a key inflection point, you want to hold it for a bigger gain than you normally would. You have to put all of these factors together with the technicals, with the market internals, and with the profile, and really see the big picture of the whole puzzle. Okay. So that being said, the next question is obviously where is the market going now? And I would have to say it looks pretty bullish here. I'm just going to wrap up here by looking at some daily charts on the S&P and the Dow and the NASDAQ, and basically keeping it simple, as I always like to do. It's really a question of, did we break the downtrend yet? So you can see here in the SPX, not quite yet. We've rallied right up to it. Came up about 40 points off the lows on the SPX. In the Dow, did we rally? We did actually cross it. We actually closed pretty healthy right above it, so that's pretty powerful. You definitely want to keep that in mind coming into next week if you're bearish. So know that the Dow has actually broken its downtrend, and NASDAQ Composite has not done so yet. So only one of the three majors has actually broken the downtrend yet. So this coming week here is going to be all about whether or not the S&P and the NASDAQ can close a daily bar above that. If it does, then I would say we must assume that prices in motion stay in motion, and that the next move would be to the highs in the market up in this area, which obviously in the S&Ps would be a retest of the 1687 up in here. All right, so I hope this is of use to you. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.